Let's talk about how traders do times 10, times 20, or times 50 of their account. How traders flip their account using this top-notch approach to risk management. Yeah, this is a system approach I've been using, and I know you need to know it so that you can use it as well. It really does not matter if you've never tried this before. If you're a newbie, it really doesn't matter. It really doesn't matter if you don't have big, huge capital to try this. You can do it on $100, $200, any capital you have. And the truth is that this is how the big boys do it in the market. And this is how I as well have been doing it and making mad profit from the market. Now, I call this system, this principle, using less to make more. Now, let's assume I have a $1,000 capital. The first thing I have to do is to determine my risk appetite, right? Just in case you don't know what risk appetite is the amount of money you can afford to lose on a particular trade. Now, I literally want to know my risk capital for this account even before I start trading the account. Let's assume on a particular trade, I can only afford to lose $25. Yeah, I can't do beyond $25 because the moment I do beyond $25, I get traumatized emotionally, right? That means I've gone beyond my risk appetite. So on a particular trade, I pick, right? I can only afford to lose $25. This also means that this $25 is my stop loss margin, right? My stop loss must not pass $25. I've determined that my risk appetite is $25. The next thing I have to do is to divide this $25 by my capital, which is what? 1,000 US dollars. Now, divide 1,000 by 25, you should have 40. That means I have to consistently lose 40 trades to blow this $1,000 account. Yeah, I don't know if you understand that. I have to consistently lose 40 trades to blow this $1,000 account. You've probably read it in a textbook, fix your risk appetite and all like that. But that is not where I'm going to. The most amazing part about this thing is this. Now, your $25 is going to be your trading capital. Your $25 stop loss is going to be your trading capital. Your $25 appetite is going to be your trading capital. What do I mean? It means out of this $1,000 you have, right, as your capital, you have to open a separate account and deposit $25 into it. I don't know if you get that right. Open a separate account and deposit your $25 into it. Now, what do you do after this? All you have to do is to go full margin on this $25. Now, let me explain. Now, let's assume I removed $25 from my $1,000 trading capital. I opened a new account under my broker. I deposited this $25, or I transferred this $25 into a separate account. Now, any trade I will be opening, I will open it on that $25. That means regardless of whatsoever that happens, I can't lose beyond that $25. All right. It is a very strict risk management procedure. But this is the most interesting thing about it. On this $25, what you do now is to constructively go full margin on it, right? That means you open a lot of positions on it. Now, you can only have two possible outcomes. It's either you lose the $25 or you go times 10, times 20, times 50 of your account. That means you can take $25 to about $1,000, $500. You can take it to about $2,000. It depends on how good you are. You can take $25 to about $250. That's 10 times 10 times 20 is about $500. You can move it just like that. This is how profitable traders, how big time traders are doing it. They first define their risks, understand their risk appetite, $25 just for example, and what they do is constructively go full margin on this. You have only two possible outcomes. It's either you go home losing your $25 or you go full time making times 20 times 50 of that account. Now imagine using this approach, you literally don't need to be perfect, or you don't need 50, 60, 70% win rate, just like you chase it. Out of every 10 trades, all you just need to do is to have 1 or 2 wins. Now, having 1 or 2 wins puts you in that big profitable margin, right? 1, 2 win puts you in that big profitable margin. Now, I don't know if you've heard of a trader called Richard Dennis in the 80s. Richard Dennis used 20% win rate to make over $400 million from the market. Now, you can only imagine 20% win rate making over $400 million in the market. Think about it. Which kind of risk management approach he used? This is what he used. This is the kind of risk management approach he used. Going full margin on what? On his winning trades. Constructively, right? Going full margin on his winning trade. Now, this approach has been employed by a lot of traders, a lot of top traders, traders like Tim Rollins, or Haji, Professor Never Miss. These traders have used this approach and they've made mad fortune for themselves. Imagine having $900 as your risk appetite and flipping it to about 50,000 US dollars. Imagine having $50 as your risk appetite and flipping it to about 2,000 US dollars. Imagine even having $5 as your risk appetite and flipping it to about $100, $200. This is a very good approach traders have been using. You don't need to be right all the time. All you just need to do is to take advantage of a trade setup that goes your way, right? Now, in my subsequent videos, I'll be showing you how I do this live, right? How I constructively enter positions to what? To flip my account, and it does not even matter if I blow my risk appetite. Probably I blow off $100. It doesn't really matter because I am pretty sure in my next few trades I'm going to make it times 10 back very soon, right? I'll be showing you how I will be using this approach physically on a live account and how I do it for myself, right? And how you can as well implement it for yourself. Now, again, you don't need 90% win rate, 20%, 80% win rate to be profitable. All you need is to what? Is to take advantage of at least 2 trades out of 10. In fact, if you can do it 1 trade out of 10, 2 trades out of 10, take full advantage of it, and then you see yourself in the profit margin, big time profit margin. These are what profitable traders do. They call their losses short. $25 is just the risk appetite. Losing $25 and using that $25 to prepare to making something like 1,000 US dollars is out of the blue. It is not the normal way regular traders think, and it is something you have to employ into your what trading system, because trust me, it will make you big time profitable in a very short while. All right, now I'll be showing you how to do this live. If you've not subscribed to our YouTube channel, ensure you click on the subscribe button and turn on post notification right now, and like, and let me know your thoughts about this particular risk approach in the comment section. See you in the next video.